Aloha, this is Joshua Hayes for September 8th Market Wrap-Up Monday. The first thing I want to show you is let's look at the NASDAQ. We know that the NASDAQ has been in a downtrend since the October 31st high, which is up here. As you can see, lower highs going all the way into August, and then we get here into September. Interesting action is starting to occur again. There was a very heavy volume day today with price up. But on the NASDAQ, it was only up 0.62%. Now, everybody should know by now that the NASDAQ should be leading the Dow Jones Industrial Average and New York Stock Exchange of old stodgy stocks. But instead, it got a strong open, sold off for most of the day, but at the end of the day, a little rally helped keep it off its lows, giving it a nice tail. And on a 2-day, we can still see it's almost like what they would call a shooting star if it was up here kind of pattern, is it's like going down. I don't know all of my candlestick chart patterns names because I do not need to know them. But anyway, the NASDAQ had a nice bounce on heavy volume, so what we can officially do, is that this could be day one to some, or this is now day one of a rally attempt. However, with the close and with the shaded areas showing that the close is much lower than the open, this NASDAQ to me is still in precarious condition, and until it gets above the 50 and 200 day moving average, I wouldn't be calling a bottom anytime soon. Now let's go look at the Dow Jones Industrial Average, which had one of the better days today. As you can see, it retook the 50-day moving average, and it did so on higher volume. The only problem is with this higher volume is, if you compare it to the July volume, and even over here to the March volume off the lows, you can see it's much lower. And the fact that the Dow Jones could not come back and overtake and close at the high of day from the open shows that bulls were not in complete control, but that the bears and bulls are still fighting it out, and there's still a major battle here. And that's why from this random date here on June, I'm going to select it here, the Dow Jones has only moved 0.5% in, that's 2.5 months. It's moved 0.5%. So it's still a big battle of bulls and bears. Nothing has been resolved by just taking over the 50-day moving average. As you can see, it's done that quite a bit, and it doesn't hold. So you can say it was a bullish day for the Dow Jones Industrial Average, but I'm not, because the volume was lower than July and March. And overall, looking from the top here, it just looked like it's, I don't know, it just looks like a trap market, not going anywhere, just not good. Let's look at the New York Stock Exchange. New York Stock Exchange, a nice day, much higher volume, which I definitely like here. I do like to see that. But once again, the volume compared to like all the volume off the July lows and all the volume off the March and January lows is still very insignificant. You can see volume gets lower on each bounce try, or even the sell-off I was showing you. So this is still lower volume. It still isn't taking its 50-day moving average. Nobody should be bullish yet. There is no reason to be calling a bottom here unless volume was way up here and we were up well over 3% today. Then I could see that. Let's look at the S&P 500. S&P 500 will see stopping right at the 50-day moving average. As you can see right here, the white line, it did have bigger volume too, but once again, compared to the January, March, and June, July, July rally attempts, the volume is still lower. So even though we were up 2% and the volume was much larger than before, this is a possibility that we might have a good bounce starting here, but it's very easy. Tomorrow we could come in and completely reverse everything, as you see with this September day when we were down almost 3%. So we could come in and sell off 3% tomorrow, and I would not be surprised because we're not above the 50 or 200 day moving average. The last one I want to look at where volume's irrelevant, but I'm sure it was higher, was a small cap 600. Now this chart is in a more bullish position than the others as it's above the 50 and 200 day moving average, but the unfortunate part is that the 50-day moving average is not above the 200-day moving average yet. And with not only this index not looking good, I'm going to bring up the IBD indexes if I can. Markets, I got to remember where they are. IBD indices. I want to show you the IBD 8585, which has been one of the longest ones I've been tracking. And as you can see here, this is breaking down and continues to break down and had another down day, as you can see today, or basically flat. But the 50 and 200-day moving average is well below what you like to see. And it appears volume was extremely small. I know that's wrong. They're going to have to update the volume, but even if volume was higher, that would even be bad. But as you can see, this is a leading stocks chart. This is where your leading stocks come from. And this is the 200-day moving average, and this is the 50-day moving average. And as you can see, it's strongly below each. And the last one I'll look at is the IBD 100 that confirms it. And as you can see, another basically flat day. I guess I'll update it later on, but this is one ugly downtrend, and it is so far away from its 50-day moving average, with leading stocks looking like this, and only things like the Dow Jones Industrial Average looking bullish. I'm still very bearish on this market, but of course I would hope that we could rally and make money, but I would remain cautious and bearish. This is Joshua Hayes with your market wrap up on Monday. Even though it was a very active day, really we're still going nowhere in the larger time frame. Thank you very much.